Well, another Dow component reporting third quarter profits after the closing bell. AT&T, the telecom giant, beat Wall Street estimates by a penny a share. Profit there, $3.8 billion, even though revenues were slightly below forecasts. AT&T added 363,000 new wireless subscribers in the quarter, but that was way behind the bigger rival Verizon Wireless, which added 927,000 during the same period.
Those disappointing earnings from Caterpillar that we just told you about, and a mixed bag of quarterly results out today, pulled down stocks, and the S&P 500 snapped its 5-day winning streak. The Dow lost 54 points, the Nasdaq down by 22, and the S&P fell 8 points. Over in the bond market, Treasury prices continued to rise, pushing the yield on the benchmark 10-year down to 2.5%, its lowest level since July.
Well, most of the nation breathed a sigh of relief last week after lawmakers finally resolved the debt crisis and reopened the government, at least for a few months. And mutual fund shareholders reacted by putting money to work. The Investment Company Institute says that investors in U.S.-based mutual funds sent nearly $3 billion into stock funds during the week ending October 16th, marking a dramatic turnaround from the 3 previous weeks when investors pulled billions out of equities and put them into bonds.
So which are the most popular stocks found in those mutual funds, the ones people own in their retirement accounts and may want to follow a little more closely? Dominic Chu looks at some of the most widely held stocks and what makes them so popular with institutional investors.
Even if you aren't an active investor or trader, chances are if you've got a mutual fund, IRA, or 401k plan, you've got some of these stocks. Think of them as America's favorite stocks. Mutual fund data firm Lipper says some of these stocks are the most owned by those mutual funds, and they include names like Google. Shares are up around 45% in 2013, more than doubling the return of the Dow Jones Industrial Average. Then there's the king of America's big banks. JP Morgan Chase has been at the center of trading scandals and alleged mortgage misconduct, but CEO Jamie Dimon has managed to steer the company through the rough waters, and the stock has risen. On the energy front, Chevron has been a gainer, but its 11% rise this year has underperformed the broader market. Then there are a couple names that just about every investor is familiar with. Apple. After hitting a record high of $705 in September of last year, the stock has steadily drifted lower despite the rollout of new products like the iPhone 5S and 5C models. Some analysts think it could be a while before we see those record stock gains again.
The old days of seeing the big advances are probably going to be more challenged for Apple going forward. A lot of that also might be this, the law of large numbers.
Then there's General Electric, GE. The industrial giant is becoming less dependent on its financing arm and more focused on enabling the growth of the world's energy and infrastructure efforts. Some experts believe these types of companies will be the outperformers.
In particular, we want to own the stocks that have the greatest exposure to growth. We think investors are going to be looking to industrials as the place to be.
Just because a stock is popular among mutual funds doesn't necessarily mean that it's the right stock for your portfolio, so doing your homework is critical. For Nightly Business Report, I'm Dominic Chu.
Well, you heard what Dom just said. So should some of the stocks he mentioned be in your portfolio or not? Let's ask Mike Holland. He's chairman of his own money management firm, Holland Company. Mike, great to see you again.
Ty, great for having me. Thank you.
In my notes, it says that you see this bull market as the most comfortable bull market you've seen in a long time. What do you mean by that? And do you mean that you would be comfortable yourself putting money into, let's say, a broad S&P 500 index fund?
One correction to what I said, because sometimes I mumble, Tyler. Most uncomfortable bull market. And the reason I said uncomfortable, it's because people from the beginning of this in 2008, 2009 have been skeptical of the market. And that's one reason these valuations are so low and attractive as I find them still to be. And to answer your last question, I would absolutely, if someone didn't want to pick individual stocks or didn't feel competent to do that or didn't have the time, I would absolutely talk about one of the index funds like Vanguard or someone like that.
All right, so Mike, let's talk about what Dominic was just reporting, America's favorite stocks. And at the top of the list, we're going to talk about Apple. Would you buy, sell, or hold this stock? It's now trading at $525.
Great question, Susie, because in Dom's report, I would absolutely agree. The stock has been an underperformer, and yet the company has been an outperformer. You look at the excitement about the new iPhone, the more expensive one. I just came back from China, as you know. They are frothing at the mouth to own these things. So the customers and the business doing great. The stock really, to Tyler's question a second ago, really the stock is underperformed because people are skeptical.
All right, let's move on to Google then. Buy, sell, or hold on that one. You like it?
I own it and I love it. I love, Tyler, companies whose names are verbs. And and this one is, once again, at a valuation, it's more expensive, as Dom was just talking about, than it was a year ago. But still, with a company growing over 20%, as large as it is, and less than 25 times earnings, I think it's a steal.
All right, so General Electric is not a verb, Mike, but what do you think of it at $25?
I think Jeff Immelt, to what we heard a second ago, has repositioned the company, a huge company, in a way that is going to take advantage of the changes we're seeing around the world. I think the stock is doing better and will continue to do so. I own it as well. Susan.
How about J.P. Morgan? This has been obviously a very troubled company, at least as far as its legal costs are concerned. Would you be comfortable owning that one?
I am comfortable, to use that word, and I do own it. And it's a little bit of a reverse from what we just talked about a second ago, Ty, with Apple. This one, the stock has actually done reasonably well, given these headlines, the $13 billion going to the government, et cetera, et cetera, et cetera. The stock has done reasonably well, and I think in large part because the market believes here that the management can get through this, and I think it is the class name and the class management in the industry.
What about Chevron, Mike? It's up 11% year to date. I know it's not in your portfolio, but would you buy it, sell it, or hold it?
If I had to do one of the three, I'd buy it, but I would prefer, which I do, I own ExxonMobil. I think I'm huge on managements that perform well over a long period of time, and more recently, ExxonMobil's management has done extremely well. I expect them to continue to do so, and given the valuations, I would absolutely own Exxon rather than Chevron.
So you think Exxon is the best of breed there. Quick thoughts, very quick, on the two stocks we kicked off the broadcast with, Caterpillar and Boeing.
Don't own either of them, but if you said I had to own one or the other, I'd own Boeing, not Caterpillar. The mining cycle is going to be longer than people suspect, would be my guess.
Mike, you're becoming a verb yourself.
Ty, thank you.
Mike
Susie,
Holland,
thank
chairman
you.
of Holland Company. Nobody does it faster or better than Mike.